We are going to start today's roundtable session with a conversation with Rahul Chandra, Managing Director of Unitary Helion Ventures. Rahul, welcome to the show.
Thanks, Maureen. Pleasure to be here.
So Rahul, let's get you introduced to our audience. Tell us about yourself and about Unitary Helion. What are you investing in? What is the investment thesis? And so on.
Sure. Thanks, Maureen. So Unitary Helion Ventures is a new venture fund, which I co-founded with my partner, Bala Srinivas, after investing out of a fund called Helion Ventures for 12 years, which was also an India-focused fund. And Unitary Helion Ventures is a fund that we are starting with a more specific focus on the areas that we have learned more about or understood better over the last 12 years of investing. And we're trying to keep that focus also on India, but we are trying to go deeper into what is middle India for us, which is next 400 million Indians. And it's been, the last 12 years has been a good journey of learning and also helping several companies. And those learnings are what we are expecting to put to good use with the next set of founders that we back.
All right. How big is the fund?
So the corpus is 100 million, Maureen, and the fund is something that is going to invest in early stage. Of course, our typical check size would be in the 2 to 4 million. We are expecting to do mostly Series A's in this. And as you know, like I said, it's an India-focused fund. So what applies to us with these check sizes is more the ground reality in India. Even though it's fast-changing, but that's the check size that is typical for something that can get us into a Series A deal. And we expect to build a portfolio of about 16 to 18 companies. It is a hands-on fund, what we have done in our past lives, which is to work very closely with our startups and founders. So we want to keep it more narrower and have the bandwidth to work with each and every founder and do our bit to make these companies successful.
So, Rahul, if you could go back to Helion and give us a few examples of the kinds of companies that you're talking about would be your primary focus in this fund that you already invested in and had experience with in Helion. We know Helion very well. We've had Ashish here before, and I've known Ashish for many, many years. So go ahead and give us a little bit of an illustration of what you mean by your more focused investment thesis.
Sure, Shmana. So, as you know, and Ashish has mentioned this, Helion started in 2006. The landscape at that time was very few VC firms which had an entrepreneur-first mindset. It was still an evolving phase of the industry. The funds that were investing were coming more from backgrounds of fund management versus the more typical Silicon Valley style of working alongside founders. So that, I think, spirit continues in Unitary as well. But also Helion was a bigger fund. We started with a $140 million fund, then our second fund was 210, third one was 250. So as our fund size increased, so did our areas of coverage. And, we also were going through a phase in India where digitization was minimal to begin with. We were still investing in a phase where we had to cater for people booking tickets through a phone call for a bus. And though that multi-channel customer acquisition stage, we actually saw it change slowly and then very quickly from 2011 onwards. So from 2006 to 11 was a very slow stage of adoption. And of course, the percolation of digitization in India. But our thesis, of course, changed in 11. But what it led to over the last 12 years was multifaceted. So we were investing, again, more similarly to a Silicon Valley fund, which is consumer enterprise and consumer internet specifically. So as you can hear from these are fairly broad terms. And since you know both sides very well, which is Silicon Valley and India, you know that the depth that you can get to in a particular vertical in terms of the disruptions that are happening and the kind and range of companies that you could get to invest in the valley is far deeper. And India, some sectors have evolved quite nicely, but still it is, a more shallower space. So expansion in multiple areas actually leads to some form of dissipation of a value add that a VC firm could do is what we felt. So Unitary has had experience in certain areas which have done very well, and the common thread across these companies that did very well was that they did not run into the classic scale-up wall. And of course, we have seen high cost of customer acquisitions in India, retargeting of the same middle-class consumer who has, that same consumer has been targeted by every company, leading to high cost of acquisitions and of course churn, because the actual customer needs were sometimes met, or sometimes the customer was just experimenting. These were again in the early stages of digitization in India. But the learning from all this is that the top 100 million consumers are the most targeted, because they're also the ones with the deepest pockets in India, and of course they are the ones who are adopting faster than the others. But what happens in that top 100 is that you do run into scale issues, and the cost of acquisition, of course, sometimes makes it unviable to have that customer. And then when scale issues happen, then it becomes a double whammy. So what we saw as a common thread on what worked well, where scale was, a well-spent acquisition and companies scaled really well, was where the companies were targeting the middle part of India, which is the next 400 million. And here the gaps are so wide again, and the demand is so unmet that customers tend to to actually seem like an infinite pool. And the challenge with targeting this segment earlier was that, of course, number one, the percolation of digitization, which in the last 3 years since Geo happened has been sorted out. And I think the cost of acquisition is linked directly to the cost of bandwidth and, of course, the number of smartphones. I think everyone's very familiar with what's happening in India in terms of the price of bandwidth and the price of a smartphone. So adoption is getting pushed by multiple factors, and we feel that tailwind on those will continue. There will be more and more spread of being able to get online. So this is one, of course, entry barrier which has been lowered over the last 3 years, which gives us a better access to the next 400 million. Second thing is that...
Before you go on, Rahul, on this topic.
Sure.
What are the customer acquisition channels that are producing for this type of customer, the next 400 million? Are they searching on Google? Is it a vernacular speaking customer? And you have to, think about those kinds of points in acquiring those customers. Is it primarily a mobile advertising customer? What is the customer acquisition strategy for these?
So it's a mixed bag is what we are seeing. It's sometimes a case of a mobile a part acquisition through a Google or a Facebook, and a conversion through a face-to-face. So there are some models, especially in education, where feet on street sales force is very important, and we're seeing that to be where higher tickets are involved, where it's usually an annuity customer. It's usually a combination of these two. So that, of course, drives up the cost of acquisition to plus 100. The second thing we are seeing change from the 100 to the next 400 is that B2B2C is actually becoming very relevant, because, I was going to this point, but the digital rails that India now has in terms of the identity management or the onboarding, the cost of those have come down significantly over the last 3 years. which actually allows you to access your business channel partners to then acquire their customers and bring them on board. So we are seeing, for example, data companies giving access to credit companies, where in combination they are then attacking. We're seeing a weather company give weather data to, or actually, work with a startup which is working on insurance products for the rural agri side of the business. So we're seeing these combinations happen. Banks, traditional Indian banks, are opening to digital wealth management companies, their customer base. So we're seeing a lot of these marriages happen in the B2B space, which is then keeping costs low as well. I think the third channel that we are seeing, of course, that for the lighter content type companies, where the sign-ups are lighter, where the fees is minimal or zero, and churn is higher. We are seeing customers come in through campaigns which are more brick and mortar. So there is some, I guess, variation, or the fan kind of opens up more in terms of how the channel open up for customer acquisitions versus the versus the top 100 who were, Facebook was one of the most cost-efficient channels. And here you have to keep costs low. We have also seen one company we have invested in where the partnership with a mobile phone brand has actually been very productive in customer acquisition, because there's also a shift in the market share of the phone brands, and the business models of the phone companies are now participating in growth beyond selling the hardware. So the layering of the subscription models on top of the hardware cost then allows several software companies to go and access the customers that a 30% market share company in India can then give access to. So surprisingly, some of the cost of acquisition we are seeing gets dropped to as low as $2 to $3 of a paying customer. So we are seeing significant drops in customer acquisition costs.
And geographically, are we talking about non-major metros now?
We are absolutely, we are talking about the next at least 50 towns and cities where, especially if you travel there, you're seeing the change happening. There is certainly a mindset that a VC needs to change when they think about a customer in these parts. But when you go there, I came back from a tier 2 city probably, and it's not a state capital. And when you go there and talk to younger people, there is even a higher felt need for accessing some of these services, which have not reached these parts. Of course, the Flipkart story of retail infra not being present in India, but doing the digital leapfrogging for e-commerce in India also then translates to several other products and services. And again, the acuteness of that problem is higher when you go to these, the next 15, from 15 onwards to the 50th city. And purchasing power, of course, is concentrated in 4 areas. So a bulk of the wallet share goes to agri or food consumption. So surprise, not as a surprise, but entertainment as a share of the wallet is far lower here. But food, transportation, mobility, and spending on financial savings and investments, those dominate, and 75% of the wallet share then is represented in these 3-4 buckets.
And so, what kind of application areas are you focusing on? Is fintech the top one?
We are absolutely seeing the marriage of the size of that opportunity and the adoption as well. So the $2 trillion opportunity, which is probably the biggest in India, is fintech. And but fintech also marries itself really well. As I was mentioning, we've seen a data company or a weather company marry itself to an insurance tech company or to a credit company. And we're seeing those marriages happen very successfully, or at least the initial look of it is quite encouraging. But fintech does represent the, if you go through the common slice, that's the widest opportunity pool that we are seeing. Yes, and healthcare tech is seeming to be a very large opportunity, but we are seeing pockets of innovation. But the theoretical construct of marrying computer vision with with patient data, that combination seems very promising. We're seeing several AI companies address that, but we're not seeing as of compared to fintech opportunity, the timing of that seems to be a year or two further into the future.
Yeah. Now, can you synthesize the role of Jio? Jio is making huge investments with the assumption that they can give out their device and services for free and monetize on data. So this, what you're talking about, revenue sharing of subscription services and so forth, how much of that has kicked in gear for Jio, as in, is Jio making money of these subscription services and so forth? Is the Jio story going to end well by your assessment?
It's a very future-oriented question, but as market leaderships go, and what we have seen traditionally, owning the market obviously changes the rules of the game, and we have absolutely seen that where the other players have scrambled in the last few years to play by the new game in telecom in India. And Jio is making those new rules as the market leader. I think again, it's early days, I think, for the marriage, because last few years we have seen them take market share from everyone. And unlike Western markets, also in telecom, the story is about not so much taking market share as much as it is creating a new market. So, what Jio has really done, and that's, that's again a focus for us, is to create a market which did not exist before. So, I think the coffers are deep, and I think there is a lot of firepower. So, we'll have to watch this space for a while to see the end story. But, I think market leadership is certainly a good place to be for the next few years.
And do you have a company in your portfolio that has been able to leverage the Jio channel effectively yet?
Across the board, actually, Smana. It's not singular. It's where we have actually seen that, and you would have seen this, heard this from other participants from India, where the vernacular story and the data access, economists just carried a story of, the time pass economy, and, of course, that has been enabled by, at the ground level by the cost of data. So, that is well understood. But from our portfolio, even where it is not so much, the time pass economy, but, again, building better travel apps for the next 400 million, where their priority modes of travel, which is not the plane, not a flight, but a bus or a train, or a shared taxi company where the first thought is, oh, the car is too expensive for me, but I'm okay to sit pillion on a bike. Some of those models are transactional economies which are getting driven by the Jio adoption. So clearly the effects we are seeing are far and wide. And we have, we are seeing data. Sorry, I missed that. Could you repeat, please?
I said very exciting. What's happening is very exciting. I think it's not only a tremendous opportunity, it's really exciting to see the population completely change its modes of behavior and adopting new ways of engaging with services, and efficiencies being introduced, access being improved. It's really, really superbly exciting.
It's mind bending, actually, and we have waited very long for this, so it's finally happening. It's the sheer power of seeing so many people adopt at the same time is just, it's, we just tell ourselves that we wish it had happened sooner, but it's happening now. So it's very exciting point at this time. Yeah.
Whenever is fine, as long as it happens.
Yes.
So do you want to talk about a couple of companies that you've invested in that you are particularly excited about? What are they doing? What value proposition are they providing? And what are they experiencing in penetrating the market?
Sure. And I'll talk about a mix of, we are saving some of the new names from Unitary for a formal announcement later in the year. But, I'll cover some of them without the names, and of course the Helion portfolio that I'm managing is also doing really well. So I could talk about some of those experiences. So, I could start with Topper, which is a ed tech company out of Bombay, in Mumbai, and the business is really a learning app which is built because schools which have 50 students in a class, personalized learning is not even something which we can talk about in those kind of classrooms, where 70% of the students are being left behind, concepts are not being revisited, and personal assessment is something which is very hard and physically difficult to do. And with personalized learning apps like Topper, the app is learning with every question answered, where the concepts need to be reinforced or revisited. And the power is being shifted over to the students, where they are able to then access multiple times without worrying about getting standing up in class. Concepts that that they could ask in a live class, and this is again the power of bandwidth, right? Of a geo, where 3 years back we would traditionally think of this as running a live class. How many people would have that kind of bandwidth, etc., etc. But now a large part of the learning at Topper is happening through live classes. Live doubt solving. So after school, students are back in an online classroom where a high quality teacher is actually addressing, and this is again with the background of what the student has been doing in the past through their best engagement with the app. So this is a good example of again how the adoption and the app interaction is now blending between what is live and what is what is a low bandwidth engagement and what is a high bandwidth engagement. So this
is a company that's selling to schools?
They actually sell directly, but it's a personal subscription. The parent pays typically for the year, and it's 6th grade to 12th grade, and then for specific exams in India. But we are seeing so the telling number there is the the engagement that people the students are spending on the app. The time that that they're spending on it, one easy way to describe it, it exceeds Instagram time spent. So we clearly think that this is more interesting or more useful, where students are getting to, unless they're opening both at the same time and we are doing something wrong. But we are seeing a high degree of engagement per day, and it's daily usage, multiple hours spent on the app. And accessing, apps over continued periods. So the drop-off rates are lower, and there is very high degree of daily engagement. So
Rahul, I have a question on stage in how you're investing. So take this example. What stage and with what proof points does an entrepreneur need to come to you for you to want to invest in something like this?
Sure. So the Unitary, the Unitary parameters that we look at, we feel that there is far more angel capital and far more institutionalized seed capital now available in India from the last 7-8 years. So in terms of Series A VC going into seed, we generally like to stay in the Series A zone. The expectations, in that round for us is that the company has already raised half to a $1 million round, and they have a product with some traction. So what we are trying to also do, more of, which we had not done earlier, is to actually rely a lot on analyzing the customer engagement data. And the idea is to then predict the the single most important question at a high level, which is the product market fit, and what are the trends towards that. So we could be looking at apps which are trending towards a better fit or actually diverging away from it. So the main idea for us is to get enough engagement data that we can then use to predict what kind of engagement are we seeing. That helps us in two ways. One is, it kind of confirms the size of the round, i.e., if this is if this is still at a stage where we'll need to, keep moving towards finding that fit, or is this at a stage where we can start pressing on the pedal? And both need different kind of investors or different kind of rounds. So it also helps us plan the round better, and then also plan the the next 1 year for the company a little better. But an ability to look at traction, is important for us.
Looking more at engagement to assess whether the product has found its sweet spot, and then you can throttle it with the customer acquisition money to get it in the hands of more people. But what you're looking for is really the product fit.
Yes, mindset-wise, we go in thinking, okay, less experimentation on the product, more, more company building. So, we shift the focus from product to company building if the fit is there or near term. And otherwise, we do budget for, more experimentation till we get it right.
Yeah, okay. Very good. Well, we should keep talking, and we should check in from time to time and see how this is all moving and so forth. But this was fascinating and really thrilling to see what's happening. Thank you for sharing your thoughts.
No, thank you for having me. And, hopefully next time we talk, we'll have lots of successful startups. And of course, India continues to throw more Flipkart type stories in the next few years.
Well, yes, absolutely. But also, maybe stuff that is a bit more reasonable from a, capitalization point of view, because I do believe that if the whole scale game is about overcapitalization, then not too many companies would be able to do that. Whereas I think that with 400 million consumers to tap into, there needs to be a lot of companies who come out of that market opportunity. All right.
Absolutely. No. Yes. Thanks so much, Mana. Thanks for having me, and wish you all the best for the next 500.
Thank you.